You're listening to The Preferred Way, a retirement podcast brought to you by Preferred Trust Company, the preferred custodian for all alternative investments.
Hello, everybody, and welcome to The Preferred Way. I have Troy Eckard with me today. Hey, how's it going?
I'm always good. I'm glad to be on the show. Glad to talk to you and find out how life is going across the financial world.
Absolutely. Well, we're not going to talk so much about self-directed IRAs today because, quite frankly, I think everybody knows what self-directed IRA is. I'm more interested to find out what's going on in your industry, to be quite frank with you. So why don't you give us just a brief introduction? I know it's been about a year since you've been on our show. Who are you? Where you're from? What are you all about? Give us a little background.
Well, it's a very simple story. I've spent 41 years in the oil and gas space. I'm 61 years old. I started off on the investment side where I was a licensed broker, putting private accredited investors into drilling opportunities to get big tax write-offs.
Yeah.
And then being the kind of overachiever that I am, I quickly decided that I could do it better. I ended up starting my own investment company in 1991, had that for 20 something years, but then I focused on the asset side, created Eckard Enterprise. Now we're about 1.15 billion under management, about 2,500 accredited investors. We're cash flowing about 75 to 100 million a year in distributions. And what we've done is created a real symbiotic relationship between private investors who want to own energy, either in their self-directed IRA or regularly. And we're now competing head to head with larger oil companies. So it's a perfect scenario, 41 years in the making. And now we're benefiting from all that expertise and experience.
Why have you decided to stay private and not go public?
You talking about me?
Yeah.
Well, you've known me only on podcasts, but I'm not really good at I have Tourette's syndrome and things come out of my mouth that shouldn't. And I'd probably be fired within about a week and a half.
You're saying the regulators would love you is what you're saying, right?
No, I'm saying the shareholders would fire me. I tell you what kept me away from private equity and kept me away from public. I've watched a lot of my wealthy clients over 41 years. I've dealt with thousands upon thousands of successful people, public, private equity backed, et cetera. And I just watched them get skinned alive.
Yeah.
So to me, it's like running through a gauntlet. And the chance of me making it through the gauntlet and having enough value at the end that it's worth the headache has never been there. And I just learned by watching all my other clients get decimated in bad deals with public trades and private equity. I'm like, yeah, thanks, but no thanks. And I really like to be hands-on. I have a board of advisors. I have my C team. But really, at the end of the day, I've been able to navigate based on I'm really super hands-on and I really get a pulse of the market. And I've seen a lot of people who could not make the right decision because they were backed by a board or backed by a stock directive that said, you can't go left when everything says go left.
Yeah. Or they over leverage you and they try to do some crazy stuff and it completely ruins the business and everything that's been built. So I actually have a lot of respect for the fact that you have stayed private and continue to offer these types of investments.
It helps my
really cool.
Awfully. Yeah, it does. Helps me.
Well, wonderful. Let's talk about the evolution of the industry. I mean, you have done it all. Where do you find is your sweet spot for investors at this point? Because, there's a lot to the business. Where would you say to an investor is probably the best spot to be in today?
If I were just a simple passive investor that wanted not to learn about oil, I didn't want to know how the car was built. I just want to invest and make money. It's mineral rights. Just buy mineral rights. I just want to put money in, cash flow every month. Don't call me. I won't call you. I'll invest when I call it pocket change. People invest in gas with pocket change. They don't, they buy their stocks, bonds, real estate. Full gas, that little residual 3 to 5% of your portfolio. You do it when you have extra cash. Mineral rights are the right investment. I would say working interest is a very strong financial tool. It gives you the advantage of owning interest in wells, but it has a massive tax aspect. So outside of a directed IRA, self-directed IRA, it's really a big tool for reducing your W-2 income. And then, of course, pipelines and other types of assets that kind of are indirectly related to that are just different ways of approaching the same concept. I want to own producing oil and gas wells in the United States, and I want all the tax benefits, and I want those checks every month. We're one of the big countries in the world that the oil and gas industry is held by private investors. The rest is owned by governments. So that's one of the most unique things is that this is probably one of the only places you can actually invest directly like this.
Okay. So first was mineral rights. Talk to me about mineral rights. Are you really investing in oil and gas, or are you investing in real estate? Give me the differences between the two. What's your perspective?
Well, if I were just investing in real estate, you and I could buy any piece of land, any building we want, anywhere we want, and it is what it is.
Bingo.
It's crazy,
Yep.
right?
Yep.
Oil and gas, I better have the supporting technical skills, intellectual skills that tells me not only where the oil and gas is, so I buy the right mineral right, but I got to know quantity, time,
Mm-hmm.
and economic value. That's incredibly subjective because it's all
Mm-hmm.
underneath the ground, 1 to 2 to 3 miles, right? So what really makes it unique is that it does qualify as real estate, but I need like neurosurgeons and I need specialists who can help me guide where I buy it and who's going to drill it, who's going to
Yeah.
harvest it, because I don't want to pay for it. So it looks super, super easy, but it is very complex. But I think with 40 years of experience, we've made it look easy because we've delivered it consistently with consistent results.
Yeah. Absolutely. I've heard that. Well, mineral rights is just real estate. I'm like, really? Do
Yeah,
you know
'cause-
what's 2 miles down? Do you have
yeah.
any idea what what you're getting yourself into? And we've talked about this a little bit. There's so many shysters out there. Tell me what and trust me, we see a lot of it at Preferred. Um, Tell me what we should watch out for with these groups. And I'm sure you have seen the gamut, and it cannot be more frustrating to you when you stumble across this crap. But te tell me what we should watch out for.
Well, the first thing I'm going to make a comment to your listeners, and this is applies to all listeners, because I've got clients that are barely worth 1 million. I got guys that are worth 2 billion. Here's
Yeah.
the one thing that the biggest mistake people make in oil and gas. You don't think you need to know how it works. You think you're gambling. So I'll put 50 grand or 100 grand or 200 grand. I'll give it a try.
Yeah.
You took that same person to Vegas, they wouldn't even go to the $5 blackjack table, but yet they're going to take 100, 200, 500,000 of risk.
Hmm.
So it goes back to the very basics. Like, so let's say you and I were going to go to an investment advisor and we said, hey, we want to use you. Can you show me how you've done for your clients the last 5 years? Oh, I don't have that. Can you tell me how long you've been doing it? Well, I was selling homes last month. Now I'm an advisor. So what happens is investors almost help create this toxic poisonous disease called sponsors and promoters in oil and gas. I've been trailing it for about the last 14 months because I knew that most likely if President Trump got in, he was going to promote fossil fuel. There's
Yeah.
45 different sponsors out there, of which I've gone online, public data, and out of 45, I'm going to say maybe 3 are legitimate, but they have terrible
Mhm.
results. The rest are either backed by felons, cons, cease and desist orders, lawsuits, massive, but they all have dressed it up with AI websites and marketing. So what I would say the fundamentals to oil and gas is, this is me. Show me your track record that you have done anything close to what you're promoting today. So if you say this well is going to pay me back in 2 years, it's going to make this kind of return, show me your track record that you've ever done that before. You're not going to
Yeah.
get it. You will not get a track record. They will not give it to you. Number
Yeah.
two, what these oil and gas guys like to do is they like to put them all in special purpose vehicles, general partnerships converted to a limited partnership, or it's a LLC. And the reason they do that is that as a member of an SPV or a special purpose vehicle, you don't own the
Mhm.
assets, you own part of the
Mhm.
company or the entity, right?
Mhm.
Say, I'm asking for accounting. Well, I don't have to give it to you. You're getting your share of the partnership. I
Yeah.
want details of the cost. I don't have to share that with you. I just got to give you the cost to the partnership. And they
Mhm.
do that because they have so over promoted the asset. You basically have a dry hole before you ever wrote your check. So the
Yeah.
first thing is, I don't buy into partnerships. Now,
Mhm.
sometimes do a partnership, like if we're buying a company or something. But for me,
Yeah.
Eckard does is direct ownership in drilling, direct ownership in minerals. You
Mhm.
own that piece of real estate.
Yeah.
99.9% of all other oil and gas ventures are done in LLCs or tax ID'd entities. That's a major
Mhm.
problem.
Yeah.
So, and the reason why it's a problem is this, the terms of the deal are so bad, you have had economic failure. Even if you had a great well, you will lose money.
Yeah. Not crazy. I mean, it's just that simple. Just ask some questions. If you can't get an answer, just turn around and go the other direction. Like, why do people fall for this? Is it just it just
Literally,
looks too good to be true? I mean, what's
I have
happening?
never, I got to tell you, probably in the last 3 years, more than any time in my career, I am dumbfounded
Yeah.
by by the passivity and the not ignorance. I'm just saying naivete, right?
Yeah.
So you invested with this guy, you put $200,000. Did you ask him for his track record? No, I didn't think about that. Did you ask him for the number of the ID on the well you're going to own? Because every well in the United States has to
Look
have
it up.
APN, right?
Yep.
I didn't know that. Did you know you could put in Chat GPT or just Google and say, what's the 10 questions I should ask before I invest? No, I never thought of that either. I'm like, I
Come
mean,
on. I know. I know.
but it is doctors, it is lawyers,
Yeah.
it's people who run big companies, and I'm going, you haven't even asked the fundamental. You might as well walk to the shopping mall with money hanging out of your pocket and your ID to your ATM because you're just not even
Just hand it out.
hand it out.
Yeah.
And then when they find out they've been burned, they don't even have the courage to go after these crooks and liars and cheats and thieves. So they just do it again,
Yeah. They just walk
again,
away.
and
Hmm.
again.
Yep.
Um, I'm not going to blame the victim, but I'm going to say
Yeah.
there's a lot of responsibility that is at the feet of investors because they get enamored with FOMO, they get enamored with
Yeah.
and they want to be richer than their dentist buddy or they want to have a better
Yeah.
house. So you find out that you're building your house on quicksand, and next thing you know, you've lost a third to half your net worth, and you're right back where you were in 2013.
Yeah.
Scratching your head. FOMO is a big problem. And I'll tell you the other thing I've noticed is that back in 08, 2008, the big financial debacle
Yeah.
was the largest closure of financial brokerage firms. They
Hmm.
couldn't make it. It got too expensive. So you
Yeah.
had more financial planners, more licensed brokers leave the business, probably 25,000 left the business. All these investment firms shut down. So what all
Hmm.
these brokers and all these financial guys, they said, oh, we got a new mousetrap. Let's not be a broker. Let's set up a mastermind. Let's set up this group. Let's have this dental group, this doctor group, this chiropractor group. We'll charge them fees. Then we'll go get all these sponsors and bring them in. And you guys just invest in who you want, but we vetted them. But more
Yeah.
likely what happened is they didn't vet them. And more importantly, they were taking kickbacks and commissions.
Absolutely.
They've all been doing this illegal and unregistered. Now there's lawsuits going against all these so-called masterminds, and they're all being pursued by the SEC. But the problem is a mouse is going to get in your kitchen if he wants the cheese. These
Absolutely.
stupid, bad intending people, whether it's oil and gas today or next month, it's going to be, tell you what the next big thing's coming. Data centers, data racks, and electrical grids. That's the next big carbon, windmills, solar scams.
Hmm.
Over.
Hmm.
And
Yep.
investors are running to it like flies to a pile of dung saying, this is the greatest investment. You're going to get it running through the self-directed IRAs and investment accounts. And you're like, can you guys not even just slow down, take a breath,
Yep.
and go, let me think through this?
Yes.
If they really put a meter on how much they had to work to make the money they're about to invest, they might rethink it. But they spend it
Absolutely.
like it's monopoly money. But it's almost impossible to figure it out.
Yeah, it truly is. All right, let's switch gears. We'll get off the ignorance meter because I'm okay calling it that because come on,
Yeah.
people. I just it's a struggle. Struggle
It
bus.
is.
Talk
It
to me
is.
about your industry. What is going on? What is exciting right now in oil and gas that just has your engine revving?
Well, here's the number one thing that's kept me super excited for the last 10 years, and probably what's going to keep me working for another 10 years because I love what I'm doing.
Yeah.
The fact that we've been able to eliminate dry holes. I
Hmm.
know that's staggering, but what has made it so enjoyable, 15 years ago, when I sat in a room with geologists and other oil companies, we were looking at drilling a well. It was not about how much the well was going to make. It was, this well's got a 37% chance of being a successful well. I go, so I got 63% chance of losing my money. Yeah, but the other ones are a 22% chance.
Yeah. So this is a good one.
So what's exciting about this industry, they finally have been able to use technology and
Mhm.
all the processes around computers and technology and satellites and everything's going on. Now you really can get some traction. You can really compete at a smaller level as Exxon or Chevron because you're doing the same things. It's computers, it's online, it's internet, it's access, it's real time. You're watching your drill bit 3 miles in the ground with 5 guys on the computer watching the drill bit actually penetrate the earth. You had no idea 15 years ago. So what's exciting to me is you've removed a lot of the subjectivity. A geologist would get into a room, wave his arms, he got his enough oil, is Saudi Arabia in this well. Nowadays they use computers and go, yeah, your Saudi Arabia looks like a thimble. Okay. It doesn't.
Yeah. Yeah.
So because of that, it gives
Hmm.
me a greater level of confidence to talk to an investor like yourself and say, we're drilling these 5 wells. All 5 are going to hit.
Mhm.
All 5, in my opinion, going to make your money back. It's whether it's 24 months, 30 months, or 60 months. But I no longer have to tell you you're going to lose your money. Now it's just a matter of economic rotation. It's a matter
Yeah.
of how much quantity is in place. and there's 200 million acres to go drill and
Gosh.
play in. So the big guys can't box us out. We can play in the same
Yeah.
they're playing. Never
Yeah.
in my career did I ever dream we'd have an industry that is this transparent, technology driven, and finally accessible to the individual accredited investor like it is today. I thought I'd be long dead and gone before I ever saw a day like this. So thank goodness it's happened, because every day I come to work with a smile on my face going like, man, this is incredible. It's fun.
Yeah.
It's fun.
It does. It has to feel amazing to be in that kind of position where the probability meter is so high at this point. Like that's ah, jealous. I'm jealous that you
This is the truth, Carrie. In 2008, I was so tired of incompetencies and dry holes and
yeah.
bad decisions. I said, I am going to go start a landscaping company because I know how to mow grass. At least I know what the grass is going to do every day. I was so frustrated. I said, you
Yeah.
3 PhD geologists and the well's dry, and you all would have bet your mother's life it was a good well. I'm like, well, where's your mom? Oh, she died years ago. Well, of course you bet your mother's life because it's another dry hole. It was unbelievable. That's why we're running out of
Yeah.
oil. So today, now you can financially make plans. Our company's thinking about what we're buying that we can develop in 2028 or 2029. Not like, I
That's
hope that
awesome.
well hits, because if it does, we can do one more. Well,
Yeah.
it's no longer gambling. It's truly capital deployment in a very risk managed industry that was not that way 10 years ago.
So does it matter anymore where if the probability is uh, predictable, more predictable?
I think it's all economics. So we know the where. We have these
Mhm.
basins clearly defined. They're buried Grand Canyons. We know the outer boundaries,
Yeah.
right? Now it's all about economics. So the big companies today, we're at one of the lowest rig counts we've been in the last 5 years. So people say, well, where's the best place to drill? I go, simple, where the 549 rigs are today, right?
That's
Now,
right.
taking that aside, you say, but why are they economical? Well, gas prices are stronger than oil relative to
Mhm.
commodities. So they're
Mhm.
leaning more toward gas drilling than they are oil today. They're
Mhm.
saying this basin has better transportation contracts, meaning they
Mm.
get charged less of a fee to move their gas and oil to
In and
market. So,
out.
so
Yeah.
they start looking at all the components and go, this basin, this county, this area, safer, cheaper drilling, better prices, better access to the market. That's where they're drilling. Now, let's say Russia starts a war like they did in 2022, and all of a sudden oil goes to 129. Okay, let's quickly move the rigs from the gas over to the
Yep.
oil and then
Yep.
select it. So there is a lot of what I call macro view of where we should
Mhm.
drill, and there's very micro decisions making place. And so what we do is we don't try to recreate the wheel. We look around and see Chevron, Oxy, Continental, Diamond. We go, okay, if we added up all the payroll of all these major companies, probably $1 billion a year in some of the smartest minds in the world, and they're moving those rigs. Let's use
Mhm.
the data we know, the advanced permitting, go, well, let's just buy where they're going. Let's get in wells they're drilling, and let's buy minerals
Yeah.
under where they're drilling, because it's the best acreage out of 200 million acres. It's a
Yeah.
lot more complex than that, but I always say, if you want to know where to drill, just follow the rigs, and it's not that far off. Just follow the rigs.
Yeah, it's not that difficult.
No.
So you got probability, you've
Yep.
got follow the big guys a little bit, right?
Smartest minds in the world.
That's right. So why recreate the wheel?
Yep.
And then how is the political front from an advantage or disadvantage standpoint been?
Well, in 2019, we started this iteration of Eckard. All I heard from every audience for 2 years was oil's going to be gone in 30 years. How do you address the green energy initiative? And I said, it's based on fraud. It doesn't work.
Yes.
Oil's got to be
Mhm.
$150 a barrel for it to work. All that's happening is you're losing out on investing because you believe in a
Mhm.
narrative that's based on false information, right?
Mhm. Mhm.
Today, we have totally 180-degree opposite. Instead of
Isn't that
having
crazy?
anti-fossil fuel, we have drill baby drill. He's fast tracking
Yep.
permits, opening up the federal lands. The scary part for the industry, though, is what if President Trump, when he transfers out after 3 years, what if it
Yeah.
goes back
What's going to
to the
happen?
political
Mhm.
party? So these
Yeah.
oil companies, the investors, companies like mine, are like, are we dealing in 48-month decision making, knowing it can be
Mhm.
180-degree different? Or do we have any kind of runway to believe we might be in a kind of a Reagan Bush 12-year scenario where this is the beginning of a 12-year run for fossil fuel? Now you really can build that plant, put that
Yeah.
line in, you can invest that capital.
Mhm. Yep.
Capital is still void in oil and gas, though, believe it or not. I mean, right,
Really?
because of commodity prices, I would have thought with drill baby drill and everything.
Yeah.
But what's happened is President Trump said, drill baby drill, but I want oil at $55 a barrel. So private equity, Wall Street looks at it and goes,
Yeah.
you guys are going to have
Yeah.
a $20 drop in oil. So congratulations for drilling for almost free, but there's other places I can invest like data centers and all these
Yeah.
AI and these electrical grid. So we truly are drilling out of cash flow only, and that is causing supply to come down. Rigs are
Yeah.
being laid down, and this almost tsunami of price increase is building. And I think in 24 months, you're going to see oil up $20, $30 a barrel because we're going to be dropping in supply.
Yeah.
It's always a tough game. It's a game.
Yeah, it is.
Deciding for 2025 what's going to happen, or am I deciding what's going to happen over the next 5 years? I generally plan in 5-year increments. If you put a
Mhm.
well online, the first 3 or 4 years when it has the greatest production. So what does
Yeah.
that look like in 3 years? And then I'm looking at what's going to happen in 10. If I look in the next 6 to 12 months, you might just go nuts because it changes every hour by the hour.
Yeah. So that's probably where it's throw it up in the air and see what happens.
Yeah, I think
I mean,
from the CEO of Exxon down, they all said the same thing. We're going to keep doing what we do. We're
yeah.
driving cash flow. We're going to assume you're going to keep well below 65. We're going to assume X, Y, and Z. And so you can tell us drill, baby, drill until you give us any financial assurance or reassurance or any incentives. We're staying the course, and it is what it is.
Good. Yep.
And I think
And that makes sense. You gotta pick a path and you gotta go with it.
we have,
Uh,
you
yep.
know.
And you just gotta follow what's going on out there. All right. Any other advice you would give investors about oil and gas in general, how to get a hold of you?
Yeah,
What kind of investors are you looking for? Like, do you only specialize in accredited investors? Are there any other opportunities out there for anybody who's not? Um, just kind of give me an idea, or do you stay in that realm of accredited investors?
well, we only deal with accredited investors because of our registration with the SEC.
Mhm.
We now are setting up our own investment advisory firm called Eckard Financial Services. Family
Awesome.
offices, financial advisors cannot or will not do business unless we have an advisory. That'll be up
Okay.
by Thanksgiving. But
Good.
here's the advice I would give all your investors. Ready? Whether
Yep.
you buy directly into oil and gas investments like Eckard has, or whether you buy energy stocks, I firmly believe the dollar is going to sink. It's going to cause oil and gas prices to go up. And
Mhm.
for whatever basis, if you don't have energy in your portfolio, you don't have a counterbalance to your seesaw. And so there's a lot of investments that are negatively correlated to a rising commodity price. With the dollar headed down, with oil prices where they're at, with an upward tick, if you look back at 2002 to 2008, you look back to the previous up and downturn, it's a very clear pattern. I would just tell all your listeners, if you buy the stocks, buy an ETF or buy direct, do what's best for your personal net worth, but add a little bit, add 2, 3, 5% as kind
Yeah.
of that offset. I find that 95% of most investors have no energy in their portfolio whatsoever. And that to me just kind of takes away that counterbalance when things get a little higher. I think we're headed to stagflation. I think we're going to see kind of a raging market. I think we have inflation. I think we're going to be
Mhm.
flatlining. If you squeeze the top line and the profits, we're still busy. We're just not making as much money. I think a lot of industry is going to be very busy making very little profit. It's going to be pretty precarious. And I do not think inflation's gone away. So that means
No.
what I got to look at is how inflation is going to factor into oil. Oil should do much better. Gas should be doing much better. And those are things that I want in my portfolio.
All right. I was going to ask you the last question. What is the vision for your company in the next 5 to 10 years? Sounds like you've got some exciting stuff coming at the end of the year.
Yeah, we set our vision tour back in January. As the chairman, I said, here's what we're going to do. We're going to accumulate and acquire $10 billion in assets over the next 10 years. We're going to end up with about $3.5 billion in minerals, about $3 billion in drilling, and about $3 billion in ancillary assets like producing wells. Right now, there's an absolute void of capital. And so what happened is with the big mergers with Exxon and Pioneer, et cetera, when they merged, what they did was they extended the runway of their future drilling opportunity, which means now
Mhm.
Exxon has wells they can drill up into 2070, right?
Yep. Yep.
The only difference is when they buy in large $60 billion bundles, they got 2 or 3 billion of assets they really don't want. Well, those crumbs, those assets are incredibly valuable. Problem is there's
Mhm.
no buyers. So
Yeah.
we're finding ourselves looking at 100, 200, $500 million assets that we just bought one back in May that we think we paid almost 25% lower than what the market value was because there's no buyers. So there's a
Yeah.
really big opportunity in the next 36 months to buy assets the majors have acquired by bundling that they don't want.
Mhm.
You can muster the cash and the capital and the investors to do it. Tremendous upside value, very, very low risk, cash flowing from day one, and really no competition because no one can raise the money. So as long as we can do that, the vision for Eckard is simple. Keep our head down, keep our mouth shut, stay cash, no debt, and just incrementally keep buying what we're buying. I think in 10 years, we'll have $10 billion of assets making $1.5 to $2 billion a year in distribution. And then the ultimate goal is someone's going to knock on the door in about 10 or 15 years and say, we're looking for another big company to buy.
Yeah.
We offer you guys 15, 20, 30 billion for your company. We'll all decide does it make sense or not, and then we cash out. But honestly, with how much cash we're making, it's going to have to be a pretty substantial offer. So that's kind of the 10-year vision if I don't drop dead or my wife's boyfriend doesn't kick me out of the house,
Whichever happens first, right?
Whichever happens first.
Hilarious.
Yeah.
All right, really quick then. How do investors get a hold of you? What is the minimum investment and what kind of returns should they expect?
So let's start with the back end first. Our minerals are averaging 11.7% return per annum, cash on cash, over 101 portfolios. Obviously, some do much, much better. The working interest, drilling the wells, we're averaging about 92% return of capital invested within 24 months. We're averaging over 30% annualized return. We've had one bad hole that we drilled in the last 6 years. So we're hitting everything. I mean, sometimes first distributions are 18 to 35% return in the first check. So that's real exciting. The other thing I would tell you is minimum investment size. Normally it's 25,000 on minerals. It's like 50,000 on drilling. We have other ventures that may be higher, but here's the way we really view it, Carrie. We just want to know what's best for you. If you say, look, I got 200,000 invest this year, we're going to tell you, look, be in 10 portfolios at 20,000 or spread across 5 portfolios because it's important that you're successful. It's important you're diversified. Getting hold of me is easy. It's EckardEnterprises.com. But what's real important is we built probably the only app of its kind called Eckard Insights. You go to our website, EckardEnterprises.com.
Okay.
It's called Eckard Insights. Eckard Insights is the only alternative asset app of its kind. Now, you can go on there without putting any financial information. We're not going to sell your name.
Awesome.
I'm just interested. Now you ask us all these hundreds and hundreds of hours of videos and how the oil and gas industry works. We give you everything we know from an informational standpoint. Okay, great. Now you say, I like what I see. Maybe now I want to look at some actual projects. You just go back and say, now I'm ready to look. I'm accredited. I want to look. We have our own partner online where clients can sell each other their own alternative assets. We don't charge any fee for that. So deaths, cancer, divorces, clients are able to sell each other their minerals. We don't charge a fee for that. But I say this because there's not a single site you can go get oil and gas 101. So what we do is create that 101 through Eckard Insights, where if you sign up and go to it, you have everything you want. We want you to be the smartest, most educated oil and gas investor in the market. One, you'll appreciate oil and gas. Number two, by pure process of deduction, you're going to say, here's Troy's amount of information. There's no one even close. That should tell you alone why the other potential sponsors may be somebody you may not want to get involved with.
Yeah. They just can't compete. I mean, as an investor, be smart, ask questions, get answers. Can't get answers, run, find another option.
That's right. Run fast like a bear's chasing you. Go, go, go.
That's right. Well, I don't have anything else. Do you have anything else for us?
No, I will say this one thing as a positive comment to investors out there. This isn't the first correction. It won't be the last. Having gone through that in 2008, I want to offer some words of encouragement, which is you're already rich. You're already part of the 1% richest people on the planet. Don't cry, don't whine, don't beat yourself over bad investments. It's water under the bridge. But today, you got to know you're in the most optimistic, most opportunistic country in the world. Slow down. Don't feed three-legged horses. Don't say crummy investments. Get real about what you're doing and start with a clean piece of paper and start building the next 5 years of your career and your life and your investments because we have all the resources. You just got to have the right attitude. That's what I think.
Love it. All right. You heard it here first. Check out Eckard Insights. That is where I'm headed. Thank you so much. We appreciate it, Troy, for your time, and we'll talk to you soon. And for all the rest of you out there, we'll see you next time on The Preferred Way.
Thanks for joining us for another episode where retirement savers meet alternative investments. Can't wait for the next episode to learn more? Visit our website at preferredtrustcompany.com.